Hello guys, sorry about the delay there, just some technical things I needed to get making sure was working, including looking at where we are in terms of the chat boxes. So I just want to see if you guys can see me. If you're with me, let me know on the chat box. I'm not sure. It looks like it's working, so we'll go with that. I will keep an eye on the chat boxes. You guys let me know if you have questions, or as we go through, of course, just let me know if you have anything in terms of a particular market you want me to look at or something like that. Happy to do so. Okay, so just with making sure that I can see everything, let's get cracking. So, nailing FX and crypto. This means we are looking at Forex and cryptocurrencies. Now, let me just firstly cover the disclaimers, top left-hand corner. I won't read them to you. Please do read them for yourselves. If you need to pause the video to do that, then by all means do that as well. And then let me just show you what we're going to be covering today. So we'll go through the current market environment. We'll look at closed trades, open positions from the last session that we had. In this sense, the last session that we had was on FX Street. On FX Street, it's called 321 Action, I think. And it's on YouTube as well. So you can see it on the FX Street YouTube channel from the 29th of December. We put on, I think, about 6 trades that day. So we'll go through and have a look at what happened to them. How would we have managed them? Did they win? Did they lose? Were they cancelled? How do we manage our open positions and go from there? And then we'll look at some new opportunities as well. Now, if you have any questions, you can go to becky@traddictiv.com, that one there, or you can email support@traddictiv.com. Those are 2 email addresses you can go to. And then there's also this link here, tradewithufos.com/Becky. From this link, you can get different apps and platforms, some of which are free. You can book one-on-one coaching if you'd like. And you can also come down here, log in for free and ask questions in this public area. Now, the good thing about posting questions in this public space is that when we answer them, that's in public as well. So everybody can see what everybody's doing. Everybody can see the answers and the questions, and we can all learn from this space. So ideally, that's where you go for questions, or you can email if you feel a bit more comfortable. Okay, so what we'll do is we'll go straight into these trades that we put on last time. I've got a note on my other screen, that's why I'm looking over here to what those trades were, but we'll go through one by one and figure out what happened. So this one was New Zealand Swiss. We used a daily chart on the left and a 55-minute chart on the right. For those of you that are completely new and you don't know what's going on, bear with me. We'll get to placing new trades, but I'll explain things a bit more bit by bit. For those of you that have watched these loads of times, hopefully it's helpful for you to see how we might manage trades. So in this instance, we entered this position. We would have still been in this position. We would have still entered this trade. Everything was still lining up at the time when it entered. So we entered in around here, which was the 29th of December, the day we placed it. It moved out over the next few days, hit our first target, our safety target, which means now the worst thing that happens is even if it goes right the way against us and hits our stop loss, we'd be at a break even. If, let's say, for example, the climate changes round about here and we close out here, then we'd make a tiny profit. If it continues to go further into our favour and hits our second target, then great, we make a bigger profit. But we'll see what happens. At the moment, we have got ourselves to the place where the worst that happens is we break even. That's a pretty good place to be. Then we had pound Aussie. Pound Aussie. In this case, we used a day and 60 minutes on the right hand side. We're in the same position with this one in that we entered the trade. We still would have entered it. Everything would have still been lining up for the day that it triggered. So we would still be doing that. It then moved in our favour, hit our safety target. So we're now again at the same situation where the worst that happens is we're break even, and it's continuing up. Now bear in mind, our final target is quite a way away. That's quite a fair distance. So we're unlikely to hit it, to be honest. We're likely to get out somewhere in the middle based on a change in climate, or perhaps we would trail a stock behind a UFO. It's up to you guys to choose how you manage your trade, but definitely I would say if the climate changes, meaning if it's no longer a thick blue dot at any point, get out of the trade. And that might be somewhere in between, ideally as close to this point as possible. If not, it might be slightly lower down, but again, worst comes to worst, we would have a break-even trade in this situation. Then we had the Euro Aussie. And on this case, we had, I think it was a 1 day and a 55 minute. Now this trade would have been cancelled, I believe. Yes, it would have been cancelled. And that's because the reason that we placed this trade, and if I really sun smoosh this so that we can see it really, really clearly. The reason that we placed this trade here with our entry at that black line, our stop at the red line, and our targets lower down was because we had a thick red dot and the EMA within that area. The EMA then moved out of that area. So by the time it triggered, which was this day, yes, we still had a thick red dot, but we no longer had the EMA lining up, meaning we would have cancelled this trade. Now, if you don't look at it regularly and you don't follow your plan and you don't manage your trade, this was an out and out loss. But if you manage your trade and you follow along with what you should be doing, cancelling it when things no longer line up the way they should, then you would have cancelled this trade. You wouldn't have been in it. Not a win, not a loss. Nothing really to say about it. The next one was New Zealand yen. New Zealand yen. And this was a 4-hour on the left and a 20-minute on the right. Let's squish it a little bit here. So unfortunately with this one, same situation as what we've just seen, but inversed. What I mean by that is that if you'd have left this, it would have come in, hit your entry, moved away, hit your first target, moved away, hit your second target. Happy days, you've made a relatively good profit there. However, if you manage your trade properly and you follow the rules, we would have actually cancelled this trade. And the reason for that, the EMA was no longer where it needed to be and the climate had changed. So we would have cancelled that trade. Again, not a win, not a loss, if you followed it. If you didn't follow it, then great, you got a lucky win out of this. So that was that one. New Zealand yen. Then we have Aussie US dollar. Got 2 more to go. And again, I'd rather be thorough and just make sure that I am covering off exactly what we looked at so that it all makes sense. The people that joined the last session get context to it. The people that didn't get an idea of how we manage trades. So with this one, this also would have been a cancelled trade because we placed it at a time, so it would have been 29th, around about here. We placed it at a time where we had the EMA in our favour and a thick blue dot. But it didn't come back and enter until this point. And at this point, we had a thick red dot and the EMA wasn't involved at all. So we would have cancelled the trade, therefore not a win, not a loss. If you didn't manage your trade, it would have been a loss. But if you did what you should have done, then it would have been a cancelled trade anyway. You wouldn't even have been in it. Then we had, last but not least, US dollar, Canadian dollar. That was a weekly on the left. US dollar, Canadian dollar, and 144 on the right. Okay. Here we are. So this one was an out and out loss. We would have been triggered into the trade because we were going long. We were going long because we had a thick blue dot there, probability upwards. We had the EMA involved, but price obviously just came straight through and stopped us out. So overall, from the last session, we placed 6 trades in total. 3 of them were cancelled. If you'd have left them, you'd have had 1 winner and 2 losses. If you'd have cancelled them, then just 3 cancelled trades. We have 2 trades that are open and have hit the first target so far, just waiting to see whether or not they become break-even trades or profitable trades. And then we had 1 losing trade. Okay, so what we would usually do now is go to TradeStation to look for new opportunities. However, my TradeStation has been updating for hours, so I can't use TradeStation at the moment to show you that scan. So what I'm going to do is just go through the old-fashioned way and we'll come up with, and you guys can let me know in the chat box as well, we'll come up with different currency pairs that we can use off the top of our heads to go and look at. What I'm going to do for this session, unless you guys disagree with me in the chat, is that I want it to be that we are using weekly on the left and we'll have varying timeframes on the right, but we're going to go from a 60-minute up to a 4-hour on the right. Now I know that sounds weird for those of you that might see this as that it needs to be a fixed thing. I'm just going to quickly explain why before we do that. For those of you that aren't aware, on the left-hand side of our charts, whenever you watch me or my colleagues do our sessions, the left-hand side chart is to help us figure out, do we buy or sell or do nothing? So this is telling us what we do, directionally, what are we doing? And we use the autoclimate to help us with that. If it's thick blue, we buy. If it's thick red, we sell. If it's thin of either colour, we do nothing. So we've figured out from the left-hand side that in this case, we wouldn't actually be doing anything here, but let's have a look at a different one just to make the point. Okay, so we would have figured out from the left-hand side here that we have probability down, therefore we look to sell. We then look to the right-hand side to help us be more specific on that. Rather than just sell and click sell randomly in the middle of nowhere, we want to sell at strategic places that help us to have greater probability. That's why we use the right-hand side. The right-hand side simply needs to be a smaller time frame. Now, yeah, we have set ones to help people, especially at the start. It's helpful to have a set time frame to use. But actually, if you think about what it's meant to be used for, the right-hand side is simply to help us be specific on where we buy and sell. We use our AutoUFOs for that. Now, you wouldn't want to use a weekly chart on the left-hand side and a 2-minute chart on the right-hand side. They're too far away from each other. They're too irrelevant to each other. So we still want to keep it within a range. So I'll be looking at things like the 1 hour chart, the 144 minute, because that's a Fibonacci number that we use, and the 4 hour. So I'll just be cycling through those 3 time frames, seeing where we might have opportunities that line up. So hopefully that makes sense. Okay, so what I'm going to do now, just quickly, is have a look at the FX Street economic calendar to see what we should be avoiding, really, or whether or not we should be avoiding anything. So I'm going to come to the filter option. I'm going to check all of our major currencies that we trade. So the euro, the Canadian dollar, the Australian dollar, obviously Germany, Italy and France would all be part of the euro. So we'd have the United States dollar, the New Zealand dollar, the British pound, Japanese yen, Swiss franc, the euro, Canadian dollar and Australian dollar. Those are all of our major currencies. So we're then going to click high impact and apply filter. And then we're just going to make sure that we're looking at about a week's worth of time. So what we're looking at here is within the next week, what scheduled news reports do we have coming out that could impact these markets? For example, today, round about now, because I think this is GMT, oh no it's not, this is US times. So later on today, we're going to have some FOMC reports on the US dollar. So perhaps we avoid the US dollar today, because that can be high impact. It can make it move a lot, which if you're on the right side of, great. If you're on the wrong side of, can be bad. We can get slipped. Again, the US dollar tomorrow morning, US time, will also have some high impact news. So I would say, let's focus on cross pairs and avoid the US dollar for now. And we will, I was just looking at these ones as well, but we've got a couple of days for these. So yeah, we'll focus on non-US dollar pairs at the moment. Okay, so what I'm going to do is first go to MetaTrader, and I have only US dollar pairs here. Rather than set up a new one, what we'll do is if we use, let's have a look at, because we're using weekly, it's not so important. So if we do weekly and 4 hour, the bigger the time frame, the less problem there is with there being high volatility news, but still. We'll use this as just one example if we can find one, just so we can use MetaTrader and we can see it in action, and then we'll go from there. Okay, so using MetaTrader, we have a thick red dot here on our New Zealand US dollar weekly. So thick red dot, probability down. That means we're looking to sell. Where are we looking to sell? On the right hand side, in this case a 4 hour chart, looking for these red UFOs. Now how do we know which one to pick? Now we have our EMA here, which let me just come down here like this. We have our EMA value here, which is 0.6857 right now. So it's around about here. Now, that's not helpful to us. It's not helpful to us because we want that EMA line to be inside our red UFO. It's not, so we move on and we will find a different market. Normally what I would do is change time frame, but because we have high impact news coming out on the dollar, the lower the time frame, the higher the risk we take. So I'm not willing to do that right now, and I'm only showing it really for example's sake anyway. So let's see if we can find a different market that we can find something decent on. Nothing there again, unfortunately, I don't think. No, nothing there because our EMA is round about here. So not close to our UFO. Euro US dollar. Let me just squish that down. Euro US dollar. Unfortunately, because it looks like our EMA is, let's find the exact number. Our EMA is 1.1365, which is, oh, that might work actually. 1.1365. So our EMA is just within this red UFO. Just. Here's where I have a problem with this. As price moves up, our EMA will move up. And it's only got to move up 1 or 2 pips to move outside of where we want it to be. Which means it is unlikely to line up by the time we get there. So although it looks close, it's not close enough, unfortunately, for us right now. Nothing on the dollar Canadian to do because it's a thin dot there. Let's look at the pound. Right, we've got a thick blue dot on the pound. Let's see if we can get something out of this. So the EMA value here on the pound is 1.3445, which is round about here. So round about this line. And again, not. As price were to move, the EMA would move down. The question is whether or not it moves down far enough to fit into this UFO. Too far away to guess. So I would say check in on it maybe a little bit later on and see if something works out. Let's look at the dollar yen, and then once we've looked at this, if we haven't got anything, we'll move to TradingView and we'll start looking at cross pairs and seeing where we have different time frames and things like that. So our EMA value for the dollar yen is 114.16, which is quite below, all the way down here. So price would have to fall quite far, moving through other UFOs, for the EMA to move down, and still probably wouldn't coincide with anything. So unfortunately, or maybe fortunately, nothing on our US dollar pairs today to show you on MetaTrader, but hopefully you've got a better idea of how it looks on MetaTrader. And like I said, ideally we'd be avoiding the US dollar today anyway, because for the next few days we have some high impact news coming out. So we can now be a bit more flexible with time frames as we move to a different platform, which in this case is going to be TradingView. Okay, so let's just go top to bottom as I think about them. So we'll do Euro Aussie. Again, we've got weekly on the left, and we'll just change the time frame on the right. We've got an unconfirmed dot here, so we won't do anything there. Let's do Euro Yen. Okay, so with the Euro Yen, we have a thick blue dot, probability upwards, means we want to look to buy. Now the EMA is at 129.76, which is just above here. So as price moves down, it's likely that that EMA will fall into this UFO. Let's have a look on a different time frame and just see if we have something that might line up a little bit better. So we'll look at a 144, and it's just loading. So 129.76. I'm much more comfortable with this one, and that's because, so 129.76 is about here. It's within 2 lots of UFOs on this time frame, and it gives us a little bit more room that as price falls, it's still likely to fall within these UFOs. Let's have a look at the 1 hour, as that's the other time frame we were going to look at, see what we've got, and it doesn't look like we have anything around there. So no problem, we will use the 144 and place a trade finally. I know it's taken 20 minutes or so to get this trade on, but hopefully this is still helpful. Okay, so in this case, our entry will be 129, or actually be 130, 0.02. So I'm just rounding that up. Actually, sorry, 0.1. Just adding a couple of pips to the first number there. This bottom number, which is 129.278, I'm going to round that down to 27 and then take off 5 pips, which is 129.22. Okay, this is also good for those of you that are looking on the left-hand side. You can see it's also overlapping with a UFO on a bigger time frame as well, so that goes in our favour. Our final target is going to be up here by this red UFO. The price of that will be 137.06, and we'll work out in a second where our first target will be. So 130.01 to 129.22. $50 risk. I do that just as an example. I do that with every trade. My profit target for my first one is always 1 to 1 away. So in this case, it's going to be 130.80 is 1 to 1 away, and that will be my first trade. The second half of this trade, so 130.01, same stop loss, same risk, so $50, and our profit target was 137.06. So there we go. Let me just place a little note so we remember next time what was going on. So placed on the 5th of Jan, 1 week, 144. Great. There we go. So I'm just going to make a very quick note myself. In fact, I'll come back and do that afterwards so I can be using this time a bit better. So we looked at the euro yen. So now let's try and look at something that's nothing to do with the euro or the yen. So let's have a look at the pound Canadian. And again, I'm just going to cycle through until I find a thick blue dot or a thick red dot, and then we'll see what we've got in terms of opportunity. Pound New Zealand, let's try that. Okay, so on the pound New Zealand, we have a thick blue dot, probability up there on the left-hand side, means we're looking to buy. Now our EMA value is 1.9608, which is quite far away. It's down here. So actually too far from current price for us to really be looking at this, I would say. Okay, so that is the pound New Zealand. Let's have a look at the pound Aussie. It's probably going to be similar because the Aussie and the New Zealand are close to each other. We've still got an open trade here on a smaller time frame. So what I'm going to do is I'm going to look at the pound Aussie on a different platform so that we don't overlap. Let me just put a thing here. This is pound Aussie. Okay, so we've got a thick blue dot, probability upwards, means we want to be buying. Now our EMA is 1.8588, which is about here, which falls nicely inside this UFO that we're in, that we've already reacted to actually, and not far from the entry for. So that's pretty cool. Now, the only thing is it's a pretty wide zone. So let's see if we can have a look at different... Nope. 4 hours I meant. No, okay, in which case the 144 is going to be the time frame that we use here. And this will be the trade that we're placing. So it's the pound Aussie. Our entry price will be 1.8661. I've rounded up this number to the closest pip and then added 2. Our stop loss will be 1.8567 minus 562. Final target is going to be up here, 1.8988. I tell you what guys, really sorry about this. Give me 2 seconds. Apologies for that, guys. Just a phone call that needed dealing with very quickly. Okay, so we have our UFO here. We have our target here. So let's go and push this in. So it's 1.8661 is the entry. The stop is 1.8562. $50 of risk. Again, that's just an example. You guys will choose and know what your risk is, what you're comfortable with. Our target one will therefore be 1.8760. Keeps popping up with things, which is annoying, but there we go. So that's our first half in. Let's put the second half in. So it's 8661 is the entry. Stop loss is the same. It's remembered it. Same risk as well. And the final target is 8988. There we are. Let me put a little note again. So placed on the 5th of January, 1 week, 144. Great. Okay, so we placed 2 trades so far. We've got the euro yen and we've got the pound Aussie. So what we want to make sure is that we're trying to look at markets that are not anything to do with them. So let's look at the Canadian Swiss. And when I say anything to do with them, what I mean is, ideally, if you've placed a trade on the euro, place another trade not on the euro. If you've placed a trade on the Aussie dollar, ideally, don't place another trade on the Aussie dollar, so that you are being more spread out, more hedged. Okay, so the Canadian versus the Swiss franc, we have thick red dot, probability down. For those of you concerned, it is past what it should be on sustainability, but for example's sake, let's have a look and see whether we've got a trade. The EMA is 0.7228, which is just within this UFO. So happy days, that works on the 144. So let's have a look. So the entry price will be 0.7223. The stop loss price will be 0.72, so 49 plus 7 is 56. Not that great at maths, but I think I'm right on that. Our final target is going to be down here at 0.7063. I've rounded it to the closest pip and added a couple of pips. 0.7223 to 0.7256. $50 of risk. Again, for me, that's just what I do. As an example, you guys choose what you want to be risking. So our first target is 0.7190. In that goes. Our second target, again, so 0.7223 to 0.7256. $50 of risk. And our final target is 0.7063. So that's Canadian Swiss. We're doing quite well, actually, considering we took a while to start placing trades. We've now got to a good point there. So 1 week and 144 again. So we've now looked at, just to pause for a second and show you, we have now placed using the weekly on the left hand side, and actually in every case we have used the 144 on the right hand side, although we could have used the hourly or the 4 hourly. It just so happens that these are the ones that worked out in terms of having the UFOs coincide with the EMA. We've now placed 3 different trades. We placed a trade on the euro yen, we've placed a trade on the pound Aussie, and we've placed a trade on the Canadian Swiss. So we've done a pretty good job at avoiding doubling up on our currencies as well, which is pretty great. So let's see what would be left. So we would have New Zealand. I think we might have to end up doubling up here. So we've got euro yen. Yeah, I guess we're going to have to double up things, but let's do them New Zealand based. This was a trade that ended up doing quite nicely there, but that was an old one. So let's have a look at this one. So New Zealand, Canadian. Thick red dot, probability down. Our EMA is 0.8714, which is here. just outside of this first UFO. So on the 144, I doubt this is going to work, but let's see on the 1 hour and the 4 hour. So 8714, again, similar thing. That's here, not looking too good there. Let's have a look at the 4 hour. 8714 is around about there. I would say the 4 hour in this case is more likely to work because our EMA is about this point where this blue line is. As price goes up, the EMA will also go up, and it's likely to coincide within this UFO. Now it might not, in which case we cancel it, but I would think it's likely to work out. So let's see. Right, okay, we're not placing this trade, and let me just explain why. So you might notice that we have on this time frame, it's a 4 hour time frame, which is the only one of the 3 time frames we've looked at that does give us a UFO that is likely to coincide with the EMA. Why aren't we placing the trade then? Because we've got a red UFO on top of another red UFO. They're only a couple of pips difference, meaning we would combine all of them. If we combine all of them, that would give us, it might just work, but let's see. So 0.8725 to our stop loss would be 8851. Okay, so remember that our first target is 1 to 1 away, always. Why? Because if we hit 1 to 1 away and then we lose the other half of the trade, it's a break even because we've made half and then we've lost half. Our final target is always using the opposing UFO on the bigger time frame, meaning we're going short here, which means the only thing that can stop sellers is buyers, and we want to get out before buyers come in on a bigger time frame. Vice versa, if we go long, the only thing that can stop buyers is sellers, so we get out at the sell UFO. So in this case, what we'd have here, and I think I'm right by eyeing that, we'll see. Oh, that is so close. It looks like actually we are just going to be able to place this trade. So let's do it, and I'll show you what I mean. So our 1 to 1 trade is always 1 to 1 away. Our first target. Our second target is wherever we can take it. We want the first target always to be closer to us than our final target, because the point of a final target is that you take decent profit off the table. Otherwise, what's the point? Now, saying this trade would end up being, once we round it up, 1 pip off being too close, but rules are rules, and it is lining up currently. So let's put the trade in. So it's 0.8725 would be the entry. The stop loss is 0.8851. The risk will be $50. So in this case, let's see if I was right on my visualizing there. Yes, so you'll notice the profit target will be 8599, which is 0.8599, which is so close, so close to this one. If it was lower down, we wouldn't have been able to place the trade, but rules are rules. It's within a few pips, so we'll do it. So that will be the first target. Our second target, we're gonna have to round up this top number. So it's 0.8598, literally a pips difference between our first target and our second target. Very rare that would happen. And again, I would suggest, you know, you're not going to make much if a lot of your trades are 1 to 1s away in terms of your final target as well, because there's, to me anyway, there's kind of no point. If you're placing trades that are, so it's at 9.8, if you're placing trades that are 1 to 1 away overall, then you'd have to be right more than 50% of the time. It's going to hurt you more if you're wrong a few times in a row, because you'd have to then be right a few times in a row to counterbalance it. Whereas if you're trading where you might have an average of, I don't know, why is that? Just noticed that I've gone into a trade there, but I didn't mean to do that. I think I put in the, sorry, just going to close that. Put this in, yes, I put in the wrong entry there, I believe. Sorry, let me just correct this, and then we'll do that. Alright, there it is. Cool, there we are, in where we need to be. So yeah, if your trades are 1 to 1 away as an average, so between your T1 and your T2, between your safety target and your final target, put them together and average it out. If your trades are 1 to 1, 1.5 to 1 away, you've got to be right a lot, and it's going to hurt you more when you're wrong, because you'd have to be right a few times in a row to counterbalance it. If your overall reward to risk ratio is 2, 3, 4 to 1 or more, brilliant, then you don't have to be right as often, and it doesn't hurt your account as much if you lose, because let's say you lose 4 times in a row. You've only got to be right once or twice and you've balanced it out. So I would say, although this still fits the rules, you wouldn't want to be doing this regularly. It's unlikely to happen regularly anyway, but still, if you're seeing it crop up regularly, I wouldn't place trades where you don't have very much reward involved. So place 5th of Jan, this was 1 week and 4 hours. That was New Zealand, Canadian. So we've now placed a trade on basically every currency pair that we have apart from the US dollar. Now in different orders and with different currencies, but let's have a look now and maybe look at Euro Pound or something, and we'll just go through, see what we can come up with for the rest of the session. So before we even start here, I'm going to tell you why I'm not even going to bother looking at more of this. If I just bring it up. So if we have a thick red dot, probability down, meaning we're looking to sell, we want to sell at UFOs that are on this right hand side, which let's squidge and we'll see them. The EMA is all the way up here at 0.8452, which is here. It's quite a way away from current price. Current price would have to come up to meet it, meaning EMA is going to go up quite a bit, but it's too far away to really see what's going to happen. It's too far away. It has too much room to not do what we expect it to do for us to really be willing to take trades here. So even if we had UFOs around there, I wouldn't really be wanting to look at them, to be honest. Let's do pound yen. And again, I'm thinking of these off the top of my head. So you'll notice with this one, that was a trade that I think, yeah, it was a short trade that worked out well there, but let's cancel that off. It's a very similar thing here. Current price is all the way up here at 156.79, and the EMA is, let me just get my mouse out of the way, EMA is 153. It's a good few hundred pips away, 3-ish hundred pips away. As price goes down, EMA comes down, but it's too far away, too much can happen, which means no point really placing this trade, because you're probably going to end up having to cancel it anyway. It's just a waste of time. If price were to move down and the EMA were to have moved with it, and we do have an opportunity around about here, great, but unlikely to happen that way, so no point placing the trade. If the EMA was up here, very close to current price, it has less room to be unpredictable. It has less room to do what we don't expect it to do, which means it's more worth our time to place that trade. Hopefully that makes sense. So let's have a look at, let's do Euro Aussie. I think we already looked at the Euro Aussie. We did Pound Aussie. Let's do Chuf Yen, Swiss Yen. Okay, this one is quite far from current price, a couple hundred pips away, so same thing. I would keep away from that. It's just got too much time to do the unexpected. Whereas if it's really close, it has less time to do the unexpected, less room to do that. Let's do Canadian yen. This one's slightly closer, it's 120-ish away, which on a weekly chart isn't so bad. So let's have a look at this. So Canadian yen, our EMA is 89.88, which is here, which is basically within this first UFO, just on top of this second UFO. So I would say if we use this time frame, and we'll have a look, see if we've got anything better, we combine these UFOs. Saying that, there's another UFO just below it, so we'd actually probably end up combining all three of them. By doing that, you'd end up with a zone that's over 100 pips wide, which isn't too bad if you're swing trading, but let's try and see if we can get that smaller by going to different time frames. Okay, just loading there. So 89.88 is the, yeah, I think this might work out well. So this is the 144. So the EMA is around about this price. Again, as price falls, so too will the EMA. We've now got two UFOs, but they're a smaller distance from start to finish. So we should be able to coincide here. So let's place this trade. Okay, so the entry price will be 89.82. The stop loss price will be 89.26. So just to show you there, I got my entry from this number, rounded it up to its closest pip, added 2 pips. I got my stop loss price from this number, the bottom of the bottom UFO, and I minused 5 pips. That's how we ended up with our entry and stop. Now, our first target, let's have a look here, so it'll be 89.26. Same risk as we always use, again, yours will be whatever yours will be. Our first target will end up being 90.38. Again, that is 1-to-1 away, designed to protect us against being a little bit right, but not wholly right. If it goes a little bit in our favour and then against us, we don't lose anything. That's the point of this target. So there we go, let's place that. And our final target is going to be here at this red UFO, which is 91.24. There we go. So 89.82, same stop loss, same risk, profit target 91.24, and there we are. So we have now placed 5 trades this session. Let me just place a little note on here. Placed 5th of Jan, 1 week, 144. Interestingly, we were cycling through different time frames. I used the 1 hour, the 144 minute, and the 4 hour. And despite the fact that we were looking at 3 different time frames, out of 5 trades, 4 of them have used the 144 minute, which is interesting. Now that's the 144 is what we recommend as trade with UFOs, as tradictive, because it's a Fibonacci number. Tends to be that Fibonacci numbers have more probability. Not always, not 100% of the time, of course not, but just tends to be that using Fibonacci timeframes works a little bit better actually in a lot of cases. So that's why we recommend it, but it's not a huge difference. Sometimes you'll see, using different software, and I can't show you today on TradeStation, but sometimes you'll see that the difference between a 1 hour chart and a 55-minute chart is a percentage, 0.1% difference in probability. Sometimes you'll see the difference between a 1 hour and a 55 might be 5-10% difference in probability. But most of the time it doesn't make that much difference, which is why I'm happy to cycle through different time frames and find the one where I actually have a setup and prioritize that one. So let's have a look. Let's think of some more trades we can look through. Let's look at the New Zealand Swiss. So this is an open trade, so I won't get rid of that one. So we will open that up on FXCM. New Zealand Swiss. Thick red dot, probability to the downside. We're 40 odd pips away from the EMA, so that could work out. The EMA is 0.6295, which is lovely, just within this UFO. As price moves up, the UFO will too, but likely still stay within it. So we know we've got an opportunity on the 144, but I'm going to look at the 4 hour and the 1 hour just to see if there's something a bit better. If not, no problem. We know we've got a backup. Nothing on the 4 hour around that area. On the 1 hour, it's about the same. The 1 hour has the same UFO. So we'll go back to the 144, because I think this one is likely to have slightly better probability, even though it's actually the same price as looking at it. So this will be our final trade of the day. I know I've placed, this will be the 6th trade today that we've placed. Considering we took a little while to get into it because of technology issues and whatever, I think we've done a pretty good job today. So 0.6294 is the entry. 0.63, that'll be 22, will be our stop loss. Our final target is going to be here, which is 0.61. It will end up being 0.6142. So rounding up this number to its closest pip, add a couple of pips. We do that on every buy order, whether it's an entry or a target or a stop loss. The first target, let's figure out what that will be. So 6294 to 6315. $50. Again, I know I say it every time. You guys pick your own. I don't want to be doing this and people look at it and they go, oh, she risked $50, so I'll risk $50. It's not, it doesn't work that way. Especially with Forex, you've got the room. I think I put in the wrong, I put in the wrong stop loss. In Forex, you've got the room because of the leverage involved to be able to pretty much risk whatever you want, which is great. It means if I'm risking $50 and you want to risk 50,000, great. If I'm risking $50 and you want to risk $5, great. It's likely that you'd be able to do that on your broker or through your broker. So that's the first half in. And the second half, so same entry, 0.6294, same stop loss, same risk, and our profit target in this case is 0.6142. Okay, let's do a little note. So placed 5th of Jan, 1 week, and a 144, and this was on FXCM just for my own FXCM. Just for my own notes, because next time I'll probably go to Oanda by default and then be confused that I don't find it. So this is where it is. Okay, so what I'm going to do is quickly summarize for those that might have been dropping in and out and you might have missed some of the trades, or maybe you've fast forwarded the video or something like that. Let's just go through the trades that we've got on. We've got the New Zealand dollar Swiss, weekly on the left, 144 on the right, and our entry and stop and targets are what you can see there on the screen. Now we also had, going back in time one by one, Canadian yen, which was a long trade. It's a little far away. It's actually unlikely to work out for us. We'll probably have to cancel this one. But this was a 1 week on the left, a 144 on the right. And as you can see there, where our targets and buy and stop loss limit orders would be. That's Canadian yen. New Zealand CAD. Again, weekly on the left, 144 on the right. Oh, that was a trade we placed before. That's why that's happening, but nothing on right now. So, New Zealand Canadian, it was a 4 hour on the right, actually. And let me squish this one, because I think we had... Where did we place our profit target for this one? Oh, they're both at the same place. It was that one, that's why. I was wondering where we saw our profit target, but here it is. So this one was the trade where it was 1 to 1 away. Pretty much overall, I think it works out at like 1.0001 to 1, something like that. So this again, weekly on the left, 4 hours on the right, and you can see there where our orders were. That's New Zealand Canadian. Canadian Swiss. Okay. So again, it was a weekly on the left, a 144 on the right. It was a short, and again you can see here where our orders were. So it's Canadian Swiss, pound Aussie, okay, so pound Aussie here. It looks like, oh, this is a trade that we were already in, so this was on FXCM that we did this. There we go. So again, This was weekly on the left, 144 on the right. We had our entry. It looks like we've already entered, so we'll see what happens next time. We entered while everything was still lined up, so great. We entered where we should have entered, and we'll see what happens. And again, you can see there where our entry, stop and targets are. And then the final one, or the first one we looked at actually, was the Euro-Yen. Similar kind of thing. We've got our final target up here. Weekly on the left, 144 on the right, and we will see what happens with this one, waiting for entry. All of these were weekly on the left, which means we are looking to swing trade. We're looking for our trades to last a few days to a few weeks. The smaller the time frame on the right, the smaller your risk, and perhaps therefore the greater your risk to reward ratio. However, the less chance you have of it working. Because if you have a zone that is, in fact, let's go and let's find something blank. If you have a zone that is this big, because you're using a 1 hour, for example, let's maybe put that somewhere else. Okay, so let's say you have a zone that's this big because you're using a 1 hour. Or you have a zone that's this big, she says. Sorry. Right, so let's say you have a zone that's this big and you're using a 1 hour. Then you have a zone that's this big because you're using a 4 hour. Okay, so the bigger the time frame, normally the bigger the UFOs, which means the bigger the distance between your entry and stop. And our red line is price. Price comes down, it's more likely to move through your 1 hour but react to your 4 hour. Because the 4 hours giving it more space. It's giving it more space to decide what it's doing. It's giving it more space to wait and find where the exact buyers are. So if you are right on the 1 hour, let's say your target is here in either case. Well, on the 1 hour, if you were right, you might have made a 4-5 to 1. Great. But you're more likely for price to go through your 1 hour, stay within your 4 hour, come up and hit your target, might only be a 1 to 1 or a 2 to 1. But the probability was higher. Neither one is right or wrong. You've got to balance risk to reward and probability so that it works for you overall. But hopefully it makes sense. Even though I'm cycling through time frames, they're not vastly different to each other. And I do that just so that I can find a higher probability of getting into a trade that has the right setup. Still following the same rules. Okay, so if you have any questions, you can go to tradewithufos.com/Becky. You can get apps and platforms here, some of which are free. You can come and book one-on-one coaching. You can log in for free and ask questions so that we can answer them and everybody can learn from here. You can also email me, becky@traddictiv.com, if you feel uncomfortable to post things here. Otherwise, guys, I think this was our first Forex session back after New Year. So happy New Year. Hope you had a good one. Hope you have a great trading year ahead and, of course, a great rest of your trading week now. I will see you guys next time in a couple of weeks. Please reach out if you need anything in between. Take care. Bye-bye.